Welcome to Home Biz Tax Talk. My name is Lysandra Everett. I am the Home Biz Tax Lady, where I help home business owners when the tax came. Home Biz Tax Talk airs Monday through Friday, and when you tune into my show, you're going to hear about topics that are important to the home business community. All right, so on the IRS scuttlebutt, it seems as though the qualified business income deduction is going to be an audited item. So let's talk a little bit about that. So the QBI, Qualified Business Income Deduction, came about with tax reform, the Tax Cuts and Jobs Act. And what the Qualified Business Income Deduction says is that small businesses, everybody but C corporations, can take up to, not exactly, but up to a 20% reduction in their business income, and you're not being taxed on that. But there are limitations, okay? So, so first is the income limitation. So if you are a single and you have an adjusted gross income of $157,500 or more, or married filing joint $315,000 or more, then your QBI starts to phase out if you have a specified service, trade, or business. And I'm going to talk about that. Now, if you are below 157.5 and you are single, or below 315, if you are married filing joint, if you are below those thresholds, you don't have to worry about the phase out stuff. Okay, it doesn't matter if you're a specified service, trade, or business, you still get the deduction. It's just when you start to exceed those thresholds that it phases out until you get to a specific income limit. And then it's phased out completely, okay? And there is a lot of math behind that. Let me tell you, it is not for the faint of heart. Let's be real. Because one of the issues that we had at the beginning of the 2018 filing year, tax year, so filing for 2019, one of the major issues that we had is that the software companies weren't ready, because all of the math behind the QBI deduction, it was just bananas. So let's talk about the specified service, trade, or business, because this is where people are going to get into trouble, okay? So you are considered a specified service, trade, or business if you are in one of the following, and the list is long. You can also Google this to find out for yourself. But if you are in the fields of health, law, accounting, actuarial science, performing arts, consulting, athletics, financial services, investing and investment management, trading, dealing in certain assets, or any trade or business where the principal asset is the reputation or skill of one or more of its employees. So basically, if you're the face of the business, this might apply to you. Let's see. The principal asset of a trade or business is the reputation or skill of its employees or owners. If the trade or business consists of the receipt of income from endorsing products or services using an individual's likeness, image, voice, or other symbols associated with the individual's identity, okay? And we're talking about radio, TV, and that kind of thing. So, again, the SSTB, this limitation does not apply if your adjusted gross income is $157,500 or below for filing single, head of household, or $315,000 married filing joint. So, what happens? So, if you fall into one of these categories, and your adjusted gross income exceeded those minimum limitations, and you did not identify yourself as having a specified service, trade, or business, then you can get audited, and you are probably going to have to pay money back if it turns out that you are actually in this. And so this is important, especially for my home business owners that are in these financial services company, like the My Econs or MWR Financials. These actually do fall under the specified service, trade, or business. I don't care if you call it direct sales. It does not matter. You are dealing in financial products. Okay, I asked an attorney about this just to be sure. Okay, so don't get caught up in the network marketing or direct sales lingo to say, okay, this does not apply to me, when it actually does. Because if your income exceeds those limitations and you don't phase that out, then you're deducting too much and you are understating your tax liability, which is not cool. Okay, so this is, it's easy to miss, because even on my software, the thing that asks you, is this a specified service trade or business, is this little box in the right hand corner, and if you're going too fast, you'll miss it. Okay, so I know there are a lot of home business owners that prepare their own taxes. This is one of those things that if you're doing that, you need to pay attention to, because getting it wrong is going to cost you later on. Because if you take too much of a deduction, then they're going to go back and do the math. And you have to also understand that when you have an adjustment to your adjusted gross income, a lot of your tax credits are based on your adjusted gross income. So it can impact other things in your tax return, all because of a box that you did not check or did not know to check or whatever. Okay, so just know that, yes, this is going to be an audited item. You, as the business owner, you need to know, your tax professional needs to know what you're doing. So if you fall into that, then then you got to make sure that you abide by the limitations. I think the only people that don't fall into this are like architects and engineers or something ridiculous like that. I'm very angry at them for that. They had better lobbyists than everybody else, I assume. But yeah, so just know that, even in your online business, if you are the face of your business and you make your money based on your image and your likeness, that the SSTB limitation may apply to you. So if you don't know for sure, you need to consult with the professional to make sure that you get it right. Okay? And it's better to claim to be a SSTB if you don't know for sure, because if it turns out that you're not, then you can go get your money. But if you owe, penalties and interest always apply. The IRS always got interest and penalties for that. So that's what's coming down when they are auditing these returns. I think they're on 2017 now. So just know that it's going to be coming within the coming year. That's what it's going to be. Okay. So thank you guys so much for tuning in to Home Biz Tax Talk. Again, we air Monday through Friday, and you can come right here to get your questions answered about your home business taxes. All right. Have a great day, and I will see you all next time. Bye.